Hi there, you're watching Midcap Masala, and time now to get into conversation with the management from the broader end of the market. We've told you all the stocks that are abuzz. So let's get started with the management interactions. We have the management of CleanMax Enviro Energy Solutions joining us on the show. The CMD, Mr. Kuldeep Jain, is on board with us. Mr. Jain, morning, and thanks so much for your time. I was just glancing across your financials and the kind of trends that we've been seeing when it comes to the numbers, and we have seen a significant expansion in the EBITDA margins all along. Talk to us about what are the key drivers, how sustainable is the growth that we've seen so far?
Thank you so much. And yes, we are glad to report in the first 9 months of last financial year, our EBITDA overall grew by 33% on a year-on-year basis. And the margins have also expanded. This is because both in energy sales segment, margins have expanded with operating leverage. And in our EPC and plant maintenance segment, also margins have expanded. So high revenue growth, margin expansion, overall EBITDA growth.
All right, that's great to hear, Mr. Jain. Hi, morning. This is Shrishti also joining in. But we understand your focus areas, but can you throw some light on your order book position right now and the relevant revenue realization timelines for the same?
So as of today, we have 3,000 megawatt of capacity, which is operating and produces power, which we sell to our customers. In addition to this 3,000, another 2,700 megawatt is contracted, which is under execution for energy sales segment. So as a result, once that comes in the next 2 years, that will see a substantial continued growth in our top line as well as bottom line.
Okay, so that sounds good. Mr. Jain, I'm compelled to ask you about everything that's happening in the Middle East. The company has an exposure towards the Middle East region. In light of everything that's happening, could you help us understand if you have seen any impact on your existing projects, any orders that were in the pipeline? Has any of that been affected?
So about 2% of our operating capacity is for energy sales in both Dubai and Bahrain. Those operating capacities remain unaffected, right? We were building another, out of the 2,700 megawatt overall, we are building another, 1% of that, which is 30 megawatt is in Dubai and Bahrain right now. Those projects have, if you've got risk of falling debris, you're not building rooftop solar projects. So for safety reasons, those are postponed by 1 quarter. But again, that's only about 1% of our under execution capacity.
All right, but what about the client interaction right now, especially from the Middle East region? Has that been impacted as well, at least in the near term?
Actually, what we are seeing everywhere is that people are realizing because of the war, it brings the importance of shifting to renewable, self-sufficient energy to focus. Irrespective of region, including in India and Thailand, all customers are saying that in the long run, we need cheaper, greener power, and therefore they are accelerating new contracting with us.
Okay, and talk to us about some of your segments. Mr. Jain, data and AI as a segment has seen very robust growth in the last 2 years. What is the demand traction looking like? We understand there has been a new plant that has been commissioned right now in Bikaner to service this segment of yours. Talk to us a little bit about that.
Thank you. Yes, we've seen an explosion in growth from data and AI. 2 years ago, this used to be about 250 megawatt. And in just 2 years, 250 has expanded to 2,500 megawatt. And yes, we have just commissioned a plant of 525 megawatt peak capacity in Bikaner to serve the needs of global big tech giants, which includes Amazon and Google, amongst others. Therefore, we see huge potential in this segment. And, it's about 42% of our total contracted volumes today. So data and AI is now 42% of our contracted volumes.
All right, that's a huge number. Well, what kind of a growth are you penciling in the times ahead? I'm sure it will be a double-digit growth, but any particular number that you want to put in?
So the guidance we have provided is that on a starting point of 3,000 megawatt capacity, we will add at least 1,500 megawatt of new capacity in the next financial year, right? And 2,700 megawatt we have already contracted, which will come in within 2 years. So, our capacity should more than double in about 2 years time frame.
Okay, so that sounds very optimistic. Mr. Jain, I just wanted to understand that while your guidance looks very robust, it's 1.5 gigawatts in FY27, like you just told us, and you plan to double in the near future. Any risks to this guidance? Any bottlenecks, any concerns that you're spotting maybe in the industry overall at the moment?
So we've been conservative in terms of the guidance we've issued. We've said we will be upwards of 1,500 megawatt of new capacity commissioned. And that factors in the standard risks which exist in any projects which can get delayed and so on. But we have the benefit that this 1,500 megawatt is spread across, is diversified across more than 10 different project sites. And therefore that, manages the risk somewhat.
And lastly, Mr. Jain, just wanted to understand what's really happening within the industry with respect to the raw material prices, because of late, because of the supply chain disruptions, there's a lot of volatility in terms of the raw material prices. Any particular price or the raw material cost price that is a bit troublesome at this point in time, or that is fluctuating quite a lot at this point in time from an industry standpoint?
We are, of course, in an uncertain environment, but the benefit we have is that this is all make in India solar panels and wind turbines with very little cost exposure to the oil and gas value chain, including petrochemicals. Right? So we have, as of yet, not seen an impact on that side. And in the capacity that we have just commissioned, we added 1,300 megawatt in the current financial year. In that, we have, in fact, achieved cost savings of about 3 to 4% versus budgeted expense.
Okay, so that sounds good going ahead. Mr. Jain, on that note, we'll let you go. Thanks so much for talking to us so candidly about what lies ahead, and hope to chat with you once again very soon. Thanks so much for your time.
Thank you. Cheers.
Thank you so much. Okay, viewers, on that note, time to slip into a very short break. On the other side, more news and updates from the broader end of the market will follow. So stay tuned and we'll be right back.